people are rationalizing spend in a way very different from 2021 or even the end of 2020. And I really believe that there wasn't like a COVID pull forward for our business and many other software businesses. But what did happen was that there was a tremendous amount of money in the economy that the government put in the economy in late 2020 or early 2021. So decisions about spending that money were very different in 21 than they are in 22, or, from kind of after the first quarter of 22 is when we started seeing it. And so today, or in 21, let's say you have a sale to a mid-sized technology company. The way that the renewal would work is we'd send over the renewal paperwork to our main point of contact in the business. The main point of contact in the business would say, great, thank you for sending this. Can we actually add 25 users? We're going to grow into that. Great, thank you. We send back the invoice, signed, done. Your renewal's done. You're off looking to upsell other clients and get your other renewals done. Today, that same renewal actually feels like this. Here's your invoice. Okay, thank you. We have to go take this to my VP and SVP to get this approved. Can we meet next week to discuss putting together a deck? Get me these stats on usage, get me these stats on ROI, and then let's go to my VP and SVP and present it. Go to the VP and SVP and present it. VP and SVP go, okay, great, super helpful, thank you. We're approved on this thing. We've got to take this to the CFO to get it approved. Can we build a deck and take it to the CFO? Then we go and take it to the CFO. CFO goes, great, thanks, approved. Sometimes in the bigger companies, you have to go to a global CFO, but that is happening in all of our businesses. In every software business, that's happening. When people say elongated sales cycles, which every public software company is saying they're experiencing, that is what an elongated sales cycle means. Now, how does it manifest in your business? Our business, to have a high net retention rate, we upsell into the client base. We sell more users, more seats, more functionality. And we run a really efficient go-to-market motion, the most efficient go-to-market motion in software, which means there's not a lot of slack in the rope. And so when all of a sudden the same renewal takes 30% longer, you lose your opportunity to go and find other pockets of opportunity within your accounts to sell to. And so that greater scrutiny is it's hurting efficiency and velocity. And I don't see that, I'm hopeful that by mid 2023, people understand like what the normal operating environment is going to be like, and that it softens in the back half of 23. But I don't anticipate it does until then.
The one thing I really want to pick up there is you mentioned in 21, they'd also say, hey, and can we add 25? Now they're cutting most of their teams as well. Are you seeing that in terms of the seat churn, just not because of the product usage, but just because of team size reduction?
Yeah, so not typically, but by like 99% of our accounts, we're not wall to wall in those accounts. And so we're, much less penetrated within an account. And so the chance that the cut actually hits our user base is unlikely. But what I will say is that there is a lot of focus on the usage of the seats. And so if you bought 25 seats and you really only provisioned and used 20 of them, no one's going to hope for the 5 to get used in the upcoming year. They're just going to cut those 5 out. Yeah. And so that's happening for sure. The other thing I would tell you is we sell to sales departments, marketing departments. And even if there is a layoff of a SaaS salesperson, I don't see them not struggling to get another job. There is a very strong environment for hiring software salespeople today. Any of my salespeople have 7 recruiting offers in their LinkedIn in-mail today. And so I think what people may be laid off of their existing software sales job, but they're going to land in some other sales job, probably in software. At least today, you're seeing that happening. I anticipate that continues. There's a really tight labor market for software salespeople, so I don't see people sitting on the sidelines very long.
Have you had to change your org chart to accommodate the elongated sales cycle and also the increased requests from customer bases on data, on usage, on ROI? Have you had to change your actual structure as a business?
Yeah, totally. Like we had an overlay sales team that sold our sort of advanced and additional emerging products and functionality. And we ended up taking that team and instead enabling all of our sales team to sell that advanced functionality, and taking that team, it was a decently sized team, and then embedding it, pushing it back into the business and saying like, we don't need this overlay team. We'd rather give more slack in the rope by giving our account manager, putting more bodies, more quota on the street, and lowering the number of accounts our account managers have today, so that they can continue to drive similar results as they were able to last year. We took a team of, call it a couple dozen SDRs who, when you looked at the leads that they were processing, turned into very little ACV on the other side. And so we said, look, let's self-service those leads, put them through automation. Let's take these couple dozen SDRs and let's build a renewal team who can handle sort of low to no touch renewals, so the account managers don't have to focus on that, can continue to focus on upselling and selling through their different businesses. So yeah, we've made a number of tactical changes to account for that.
December 2023, okay, I will have done my gratitude journaling with my kombucha. I'll be very grateful for life. And we're going to be asking the question, is it going to be better in December 2023 or worse?
I am of the opinion that it will be better because it will be normalized. I think today there's just like a bunch of panic-induced decision-making that's not thoughtful, but just says, hey, troubles are brewing, so just stop doing a bunch of stuff, and it's sort of haphazard. I think 23, at the end of 23, I'm confident it will be a better selling environment than it is today.